Happy Friday. Mortgage bonds are falling and the Fed is going to begin hiking rates. Welcome to today's mortgage market update for January 7th, 2021. We have a lot of news to cover today, so I'm going to try to keep it short. Fannie Mae has put out a notice this week that they are changing their loan level price adjustments. Now, what does this mean? Basically, in a nutshell, it's going to cost you more for certain loans to get a mortgage. The two biggest ones that's going to cost you more is people that are getting second homes. We had an adjustment for this last year, and then they took it away, and now they're bringing it back. So it currently, if you want to buy a second home, there is no extra cost to get a second home, but they are now implementing it depending on how much you're going to put down. You're going from paying nothing extra to paying 1.125 all the way up to 4.125 extra in points. So that's 1.125% to 4.125% of your loan amount in a fee just because it's a second home. So that's a huge hit that's coming. And another huge one has to do with subordinations. So that is when you have a second lien against your house, and we keep that second lien and just refinance the first lien that's under it. Now, there's always been a hit for subordinations, but they are increasing it a little bit. That one is a chart based off of your what they call your loan to value, so how much you're borrowing based off of the value of the home and your credit score. So we basically line up those two items and it tells us how much we have to charge you. So those subordination fees are going to be increasing a little bit. Those are rolling out. Fannie is rolling them out now, and Freddie is going to follow suit. So it is something that's going to hit all lenders across the market very soon. So if you are in either of those situations, you want to get your applications in now and get locked and get settled right away before you get hit with those adjustments. Now, the Fed minutes came out releasing their minutes from the December 15th meeting, and there were some surprises in these minutes. There is a 76% chance that there is going to be a rate hike on the Fed funds rate, your prime rate, in March of 2022. So it is coming a little bit quicker than we were expecting. Now, we know that the Fed was looking to reduce their balance sheet. Now, this is something we knew that was coming, but we don't exactly know when it's going to happen. And they can do this by doing it two ways. They can do the tampering, which we've been talking about, which is where they reduce how much they're buying a mortgage backed securities. Or they can also do it by letting their mortgages they have on their balance sheet run off. And they do that by people refinancing, selling their houses, or paying off their loans. When they roll off the balance sheet, they simply just don't replace them. So all these things are coming. We just don't exactly know how much they're going to do and exactly when. But the Fed addressing the balance sheet is something that's really going to impact the bond market, and it's going to affect interest rates. And I will tell you, interest rates this week have been getting hit hard. So we are starting to see them climb. Now, the Mortgage Bankers Association released their mortgage application data for the last 2 weeks, and they did this on the 2 weeks because of the holidays that we have had. And you have to take these numbers with a little bit of grain of salt because of the holidays. It does tend to mess with the numbers a little bit. But purchase applications did fall 4%, and they are down 12% year over year. Again, we always remind you that that does not take into account cash deals. This is only applications related to mortgages. Refinances fell by 2% and are down 40% year over year. And that's because interest rates right now are half of a percent higher than where they were at this time last year. Refinances are still making up 65.4% of all transactions, and that's actually up from the previous weeks. And the reason refinances are still going so strong is because a lot of people are doing debt consolidation right now because it still makes sense. Even if you refinance into a slightly higher interest rate, but we get rid of second liens, we get rid of credit cards, student loan debt, you would be surprised at how much that actually saves you monthly and over the course of the loan. So if you're somebody in that situation, let us run those numbers for you because I know you think because the rate might be slightly higher, it doesn't make sense, but it actually makes a lot of sense when we show you the numbers. So let us run those numbers for you. Now, next week, we get the all important news of CPI, that's your consumer price index. That's the report that gives us the inflation numbers. Now, last month's reading was 6.8% with a core rate, that's where it strips out food and energy, of 4.9%. Now, expectations are that this figure is going to come in about 7.1% with a core rate of 5.4%. Now, that's extremely hot, and that will affect the bond market. And this is not good for mortgage rates. And we keep telling you, inflation is the arch enemy of mortgage rates. And the CPI is likely to be hot again in the month of February. So, this is not something that's going to stop in the next couple months. After that, it could level off a little bit. Now, we do have a strong jobs report going on right now and higher inflation. As we said, these are not good for the bond market. But stay tuned because next week I have a really special guest coming to town and they're going to join me and do a 2022 market forecast. And this is something that you are not going to want to miss. 2022 is off to a great start. We have personally seen a huge increase in purchase applications and we are ready for a great year. So if you know somebody that's looking to purchase a home, build a house, do renovation on a house, or they still haven't taken care of that refinance, please have them reach out to the Rebecca Foot Mortgage team. And please don't forget to subscribe to our YouTube channel. Just search Rebecca Foot Mortgage Team and they will bring up our YouTube channel. We have some great content on there and you'll definitely get some education and see some local things around Carlisle and Cumberland County. I hope everybody has a great weekend. Stay safe, healthy, and warm, and enjoy the winter weather.